Historically, our financial markets have been relatively small in volume compared to our regional peers. However, that situation has changed, and Uganda is outpacing its African peers. We are currently ranked third in the Africa Financial Markets Index. This has been as a result of significant structural changes across board. Notably, I'll mention one, the introduction of long-term government securities, that is the 20 and 25-year bonds. This has not only enabled the government to raise long-term capital for provision of public goods, but has also provided a benchmark for pricing for long-term sources of funds by businesses in Uganda. I think in terms of size, scale, we are catching up. But in terms of aspects like openness, market openness, we are far ahead of so many African markets. We have a very open FX market, fully liberalized. In terms of product development, we're actually also moving quite fast ahead of quite a number of regional peers. So we've had introduction of quite a number of products, and this is being championed by both the market players and the regulators. I think another important development I would like to mention is the recently announced sovereign sukuk by the government to raise an equivalent of about 405 million euros to fund the standard gauge railway. This is a big step as it enables the government now tap into pools of capital that were previously unavailable for investment. Historically, land and real estate was the primary avenue for investment, understandably, because it's visible, it's tangible, but also it's easy to understand. However, we've seen that significantly shift. I think the downside with real estate is it's quite illiquid, that in the event that you need to realize cash in a short period of time, then you find yourself with an asset that you may not sell easily, but even when you sell it, you have to incur significant costs like brokerage and legal fees, which can eat up as high as 10% of the value of your asset. Now, with financial markets instruments like Treasury bonds, they offer advantages in terms of three key aspects. One is liquidity. Treasury bonds are traded actively in the secondary market in large volumes, but importantly, in small ticket sizes. What do I mean? The minimum treasury bonds are traded in multiples of 100,000 shillings, meaning the minimum amount you can buy or sell is 100,000 shillings. What does that mean? That in the event that you hold a treasury bond and you need to liquidate even part of it, you can liquidate as low as 100,000 and in a short period of time because they are actively traded. The other big aspect is from a returns perspective. So treasury bonds in Uganda offer as high as 16% after tax returns. That is very high compared to real estate and other investment ventures in Uganda. That actually means that if you invest in such an instrument, you're able to recover your initial investment amount within less than 7 years. The last but important aspect of treasury bonds is the cash flow predictability. So with a treasury bond, you're assured of a fixed coupon at predetermined dates every 6 months at predetermined dates at the onset. That means you have cash flow certainty, as opposed to other investments where, especially if you have bare land, you'll have no cash flows. If you have rentals, then your cash flow is impacted by things like maintenance, occupancy, and the like. From borrowing against land, actually our market is far ahead, has been doing that for ages, right? But you've got to understand that a borrowing process involves, creditors an assessment, credit appraisal. There's a bit of risk associated with land. In the recent history has looked at things like forged titles, all those things. So there's a due diligence process involved with instruments like land. Now, actually, on the other hand, with the trade, you can actually borrow against a treasury bond. And with the treasury bond, all the bank needs to do is to verify that within the central bank system, that bond belongs to you. Treasury bond is simply a contract to lend the government. So the government borrows capital from an individual or an investor to provide public goods, and in return pays you coupons every 6 months, predetermined fixed coupon every 6 months, and at maturity pays you back the principal. Now, the key step to investing in treasury bonds is owning a central securities depository account, which we loosely call CSD. And opening a CSD account is a fairly simple exercise. Actually, CSD. SCD is for equities, CSD is for treasury bonds. So SCD is managed by Uganda Securities Exchange, CSD is managed by Bank of Uganda. So opening a CSD account is a fairly simple exercise, actually simpler than opening bank accounts in most banks. It involves a 2-pager form. You fill in a 2-pager form. For Ugandans, you submit a passport photo and a copy of your national ID. And once that is completed, the setup can actually happen within a day. Now, the other thing around treasury bonds is that they are traded in multiples of 100,000. So the minimum investment amount is 100,000. So for as low as 100,000, you can actually invest in a government security like a treasury bond, a treasury bill, and earn interest. So if you commit 2 million shillings in a treasury bond, it means you own 20 units of that bond, because each unit is 100,000. Meaning, if you're to sell, you actually don't need, if you have a need for 200,000, you don't need to sell the entire 2 million. You just need to sell 2 units, which is 200,000. If you compare that to physical assets, if you have your plot of land in Chanja worth 200 million and you have a problem of 20 million, you can't go and sell a corner. You get what I'm saying? You've got to sell the entire thing and disrupt your portfolio. Whereas with the government securities, you can liquidate only what you need without disrupting the balance. So you don't even have to deal with only primary dealers. So opening a CSD account and even dealing in government securities is done by all banks. So any bank can open for your CSD account. I think what you need to have is a bank account. So your CSD account is linked to your bank account. But opening a CSD account is much simpler than actually opening a bank account, because it relies on the fact that the bank has already done due diligence on you while opening your bank account. For some institutions, they will require you to shift your bond to a CSD account that is held with Pearl Bank, right? With that specific bank. It's just a simple transfer. Open a new CSD account, transfer your assets that you want to pledge to that bank for their own comfort. For the institutions, they rely on the fact that you can actually lien a security, irrespective of what institution it is. You just have to sign a lien form, you as the borrower or the investor, the owner of that security. You just have to sign a lien form upon which the bank will use to. So you can't trade, you can't sell it, but you still earn your coupons. The coupons will come to you. It's just that you can't do it, you can't sell it. Now, the other interesting thing is they don't have to lien everything. Like I said, if you have, let's say, 10 million of a bond and you want to borrow 2 million, it doesn't mean the entire 10 million is liened. Actually, the bank chooses to lien the portion it wants to cover, right? Because remember, back to the thing that you're holding units of the bond. So you can lien maybe only 2 million of that bond, and the 8 million will still be available for you to sell as and when you wish. If I compare it to other secured sources, it's much faster. Because look, if you're pledging land, the bank has got to do due diligence. It has got to get a valuer to value your land, which you will pay for. It has got to place a charge through the Ministry of Lands, etc., which takes time. But of course, you'll also pay for, there will be some costs like legal costs, etc. With a government security, like a treasury bond, all the bank needs to do is to go and check in the CSD system that the bond belongs to you, You sign a lien creation form, which is a one-pager, by the way. No, these are standard central bank forms. So it's just a one-pager form. You sign and the process is as easy as that. So it's cheaper and much easier. Yeah, as a bank, we recognize that every investor has a unique investment objective and risk appetite. So we try to provide solutions that are tailored to an individual's investment objective and risk tolerance. But beside that, earlier talked about our Wendy app, which helps us, or helps our clients to mobilize savings, both locally and those in the diaspora. To mobilize savings, then which can then be used to invest in instruments like government securities, which are good for long-term capital. Through our partnerships with the likes of Western Union, MoneyGram, Transfast, then we enable diaspora remittances in a quick and sustainable way. We also actively trade government securities, so we actually sell government securities to clients who are willing to invest, and we can also buy from clients who are looking to liquidate. Lastly, we have fixed deposit accounts, which also are another investment opportunity for clients, and they offer very competitive interest rates. Government securities are investments. Those investments have prices, right? Prices could fluctuate over time, and that affects you if you want to early liquidate. So out of prudence, the financial institution will largely ask for to take security, to take as if of a haircut on security or a buffer. Yeah, so if I'm lending you X, maybe I take, for example, I'm not saying that's what we do, but take 110, 120% of X of your security. So it's highly unlikely to be one for one. Yeah, just like it is done for land and other collateral. The outlook, from my view, the outlook is exceptionally positive, and why so? I think as an economy, we're going to go through significant transformation, especially with the with the start of, with first oil in the next couple of months. That is going to come with economic expansion, large capital flows, creation of jobs, and an increase in household income and wealth. Now, part of that wealth is going to find itself in the financial markets space, and we're likely to see increased activity and deepening of our financial markets, but also increased demand for more sophisticated products. So that makes me extremely optimistic. I think the second very, very important aspect is I derive comfort from the actions and commitments of key stakeholders, the leadership at Ministry of Finance, Bank of Uganda, and Capital Markets Authority. They are championing some very critical financial market development initiatives. Yeah. So like things like the sukuk, the sovereign sukuk, in the central bank, they're driving initiatives around new products, things like derivatives, financial institutions, the primary dealership system that is undergoing reform every now and then by both the central bank and now the Capital Markets Authority. I think from the Capital Markets Authority side, you're seeing what has happened with the collective investment scheme space, and so many other investment schemes are coming up, being licensed and the likes. I think it's kind of democratizing investment. There are initiatives like the Okusaving by the central bank in partnership with some banks and mobile telecom or mobile money providers, which will enable people actually now invest in securities, government securities, off their phones. So all that makes me extremely optimistic about our financial markets. I think I focus my optimism on the economic prospects and the performance, and I think there is no doubt that irrespective of the circumstances, that our economy is destined for significant positive transformation. I would say first oil is a very significant step, and I think from the narrative from the different key stakeholders, we should see first oil in the course of this year. That is very close. Of course, there are other factors that can come at play eventually, but my baseline assumption is it's going to be a very significant transformation. I think the projection is double-digit GDP growth in the first years of first oil, which is massive. Thousands of jobs will be created. Household incomes will be improved. Wealth will be created, and we can see that we can compare other markets where oil has been discovered and the likes. We've seen wealth creation, we've seen income growth and the likes. So that makes me very upbeat about the prospects. Financial markets instruments like government securities, treasury bills, and treasury bonds offer a tripartite set of benefits. One, I talked about liquidity in terms of the ease and the ability to realize cash out of your investment when need arises, to sell with minimal loss in quick time. Number two is strong returns. Returns as high as 16% net of tax sustainably is quite strong. And number three is cash flow predictability. That you need financial, for example, like government bonds give you certainty in terms of coupon payments. At the onset, you know when the specific date your coupon will be paid and how much will be paid, because it's a fixed coupon rate. And at maturity, you know how much face value will be paid back to you. So it gives you that level of certainty. So financial markets help you to balance your portfolio. I think traditional assets, physical assets like land, give you long-term value. But then you need to complement that with instruments that will give you a balance of liquidity, certainty, and strong returns. Because of the liquidity aspect and cash flow aspect, I think financial markets give you the option to quickly pivot. So should a need arise, like an investment opportunity or an emergency, you can easily raise some cash, exact cash you need. So you don't need to liquidate the entire investment. Can just raise the exact cash you need to meet that need without distorting your portfolio of investments. The first thing I would advise someone is seek the advice of a professional. Do not do this alone. So professionals like ourselves at Powerbank will understand your specific objective and your risk appetite or risk tolerance, and advise or design appropriate solutions to tailor to your needs. So it's very critical. Number two, I would say start small, test the waters. For example, I've talked about the government bond, you need as low as 100,000 to start. Once you receive that first coupon on time in the exact amount you expected, trust me, your nervousness, will turn into interest and optimism to actually continue on that investment journey. I think the other one I would tell the person, I would advise her is take advantage of simplicity. So starting this investment journey is simple. Opening a CSD account requires filling a 2-page form, just having a copy of your national ID and copy of your national ID and a passport photo, and it takes even less than a day once all the documentation is provided. These instruments are traded in low volume, as low as 100,000. So it's a very simple investment process. We do it in different forms, and I'll speak from the perspective of my team. In engagements with clients, we actually provide them as much information as possible. So we will tell them about, like I talked about, we understand their need, understand their risk tolerance, and advise options that are available. We educate them about these options, highlighting the risks and importantly the benefits of these options. So that's financial literacy in one way or another. We are doing sessions, online sessions. I think we have quite a number that are planned for this year, where we'll talk about investments. And I think there are other initiatives that happen across the bank in so many ways. From a corporate side, we do sessions with farmers, those in the agricultural sector. From a retail side, I think we do sessions with circles, small groups this year. So, and I think another interesting advantage I wanted to explain around bonds is you can actually structure a portfolio. You can build a portfolio of bonds where you earn coupons regularly, as regular as every month. So bonds pay coupon 6 months from when every bond pays a coupon 6 months from when it was issued. Every 6 months from when it was first issued. So you find if a bond was issued in January, it will pay coupon in July and January. If it was issued in February, it will pay in August and Feb. If it was issued in March, in September and March, April, October and April, like that. So all you need is to ask your investment advisor to find you bonds that were issued in each of those months, the first 6 months of the year, right? Because you just need only 6 months. And that means you'll earn coupon every 6 months in the year, from January to December. So it's a very good way for especially people in retirement, to structure your portfolio such that you have cash flow certainty. You're kind of transitioning from having a fixed salary to now mimicking a fixed salary or creating a fixed salary from your investments. And the interesting thing is that you don't lose the principal. You still retain the principal to meet your needs. Uganda's inflation has been quite low, stable and quite low. Below the central bank target for some time. Of course, barring the disruptions, I think from the onset of the Russia-Ukraine crisis, where we saw inflation spike globally. It wasn't only unique to Uganda, but the central bank was quick to intervene through its measures to bring it back within the 5% or below even 5%. So the outlook remains positive. I think it's tied to the economic transformation I talked about earlier on. So I think barring any black swan events, if I may put it globally, I think the inflation outlook is quite positive. And if you look at the returns on bonds, really the inflation adjusted return is quite high. If you're investing in bonds that are paying you as high as 16% after tax, it means to erode your return, you need inflation in excess of 16% consistently, which has not happened in Uganda in decades. We've democratized investment, stock saving. We pay interest rates as high as 10% on our WND platform. So if you have a neighbor vendor on the street, you can actually save money on the WND platform and earn 10% per annum.